Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of October 7th to October 11th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of fluctuating economic indicators and geopolitical tensions, significantly impacting global currency markets. The US dollar has rebounded sharply, buoyed by optimistic comments from Fed Chair Powell regarding measured rate cuts and safe haven flows following recent missile attacks in the Middle East. As traders shift their focus to next week's economic calendar, particularly the FOMC minutes and US CPI data, the landscape remains poised for further developments. Meanwhile, the Reserve Bank of New Zealand faces critical decisions on interest rates amid mixed economic signals, while the UK pound contends with potential risks as inflation data and GDP figures loom on the horizon. Investors are closely watching these trends, as they could shape monetary policy and market dynamics in the weeks ahead. The US dollar recovered significantly this week, bolstered by Fed Chair Powell's comments indicating the central bank will likely continue with quarter-point rate cuts at a measured pace. Upbeat economic data also contributed to the dollar's strength. Additionally, safe haven flows supported the currency following Iran's missile attacks on Israel in retaliation for Israeli operations against Hezbollah in Lebanon. With Middle East tensions potentially easing, dollar traders will focus on next week's economic calendar. Wednesday brings the release of the latest FOMC minutes. But given the dot plot's indication of 50 BPS in rate cuts by year-end and policymakers' preference for quarter-point reductions, these minutes are unlikely to jolt the markets. Attention will shift to Thursday's US CPI data for September. Preliminary S&P Global PMIs indicated rising business prices, and while the ISM manufacturing survey showed a decline, the non-manufacturing report suggested accelerating price pressures. This suggests potential upside risks for the core CPI rate, although the headline rate might ease due to a year-on-year decrease in WTI crude oil prices. Persistent inflation data could reinforce expectations of up to 5 BPS rate cuts in November and December, potentially boosting the dollar. The Reserve Bank of New Zealand, RBNZ, is set to drive the Kiwi next Wednesday with a crucial rate decision. In August, the RBNZ cut interest rates by 5 BPS and signaled further cuts due to inflation nearing the midpoint of its 1 to 3% target band. Despite initially projecting a cash rate of 4.9% for Q for 2024, investors are now expecting over 30 BPS in cuts for October. Recent data show a mixed economic picture. Retail sales fell sharply in Q2, while GDP figures, although better than expected, indicated slight contraction with Q1 revised to a modest 0.1% growth. The decision on whether to cut rates by 25 or 50 basis points will be influenced by these conflicting signals. The pound has been the top performer among major currencies this year, but it faced a setback after Bank of England Governor Andrew Bailey suggested a potential shift towards more aggressive interest rate cuts if inflation data shows continued improvement. Markets are now pricing in a near certainty of a quarter-point cut in November, with a 65% chance of an additional cut in December. The upcoming monthly GDP data for August, set to be released on Friday alongside industrial, manufacturing, and trade figures, will be crucial for the pound. A disappointing outcome could reinforce Bailey's comments and lead traders to push the currency lower. This week has been marked by notable economic shifts and geopolitical developments that continue to shape the currency landscape. The US dollar's recovery reflects a combination of safe haven flows and positive economic data, while anticipation builds around key upcoming reports, including the FOMC minutes and US CPI. In New Zealand, the RBNZ's forthcoming rate decision is clouded by conflicting economic signals, and the UK pound faces potential headwinds as traders evaluate the implications of upcoming GDP and inflation data. As we continue to navigate this complex environment, It is essential to remain vigilant and informed about these unfolding events and their potential impact on markets and investors alike. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.